G'day everyone, what a week. So it's 1 week on from the release of the findings into the Banking Royal Commission. It's been an emotional week, and I just want to say thank you so much to the public, the outpouring of support to brokers, and the specifics of detail and fact that have come out that I think are really relevant and really useful. I wanted to put some thoughts now that I've crystallised and really got a few key things that I want to share that I think might be of relevance. First thing is great leaders over history, and we've got a few there that they are for the people, by the people, and they put the people first. I'm really looking forward to seeing our industry leaders and government leaders interpret Haynes' intent and faithfully hold the broker industry as a viable asset, because everyone seems to agree on that, and provide fair remuneration structures that will deliver that. I really have great faith that will be the case, because I'm very encouraged by the commentary. I just want to share what I think a couple of key points for me in this week. Thanks, Shane. First one is a little bit of clarity on what a broker does. I think let's be clear on broadly what we're talking about. So the broker is a shopper between lenders. They'll have 30 or 40 lenders on their panel and use a number all the time. They will look at the products, the service, the interest rates, etc. Qualifying with one bank is not the same as all banks. They take a lot of inquiries, so I know that conversion rates are in the order of 25% that become a settled loan. So 75% of our customers are essentially on a free advice line. 25% of our customers may end up in a settled loan. Of those 25%, it's about a week's worth of staff work from first discussion to settlement of that loan. There is so much in terms of the phone calls, follow-up, assistance, support, research. It's not like a tick and flick 3-hour exercise that I've seen some people reflect in the media. And that's a really important understanding. The good brokers especially, and you would only go to a broker on recommendation. You would only go on recommendation. Most of them don't spend any money on marketing. They don't have any money to spend. So a week's worth of staff work per loan, worth putting in perspective. And the ongoing advice and support is also there. My number hasn't changed in 20 years. It's interesting that that's become a real focus of do you earn your trail or not? I want to talk a bit more about that later. And other than the actual direct work, it's administration, support, training, relationships, building a relationship with solicitors and agents and industry colleagues to get the best support to your clients. Thanks, Shane. This is not about a bank bashing exercise, this is a bit of fact. Okay, so our banks in the last year earned a profit of $29.2 billion, and I'm kind of okay with that. I'm very okay with that. Our banks held us well through the GFC. They provided great strength. They're required by government to hold strong cash reserves to get us through times of difficulty. They support individuals and businesses. So let's be clear, they have the infrastructure and capacity to support us, and we can't begrudge them earning a fair income. There's also a lot of us that are shareholders. I'm currently not. Our super funds, as individuals. So banks are an important part of our society. There's about 9.6 million households in Australia. So if you divide that profit by 9.6 million, you get an average of $3,000 per household is the contribution we all make to the profit of the banks. And again, I don't begrudge that, but I'm curious if you knew that. If I spin it down here to the home loan side, now we talked a bit about this last week. So banks make their money in home loans on the difference between the cash rate, currently 1.5%, and the delivery rate, which is the home loan rate, call that 4%. So 2.5% on, let's say, an average $400,000 loan. Now, over a 4-year period, 2.5% is $10,000 per year, is $40,000. If it was 2%, it's $32,000. That's the gross amount of income prior to providing all the services, and prior to splitting that commission with a broker. Currently, the agreed commission for a broker is in the order of 1.2%. Now, that was agreed in the late 90s and has been the pretty much the structure since then. About 0.65 up front and about 0.6 in trail. Now, it's this trail that's caused all the grief. The Royal Commissioner has said, get rid of trail. And there's been a lot of talk about this. What do brokers do for trail? Well, hang on, let's just rewind a little bit. The original deal was about 1.2% was the origination commission, the finding of the client, the work that I just said that happens before, and the sending the client to the bank, that was the deal. Now, it was not related to ongoing service. It was totally about an origination commission of 1.2%. I've got no dramas with trail being abolished as long as there's recognition of that, and 1.2% or something like that is seen as the fair comp. Banks are getting 8 to 10%. For us to get 1.2% is not too ridiculous to ask. So in terms of the dollar amount, that's how it was. It was always intended as an origination commission. So when the commissioner asks questions about what do you do for that trail, well, the question before that should have been, where did that start? What was the deal? I've talked to bank CEOs, I've talked to broker CEOs of aggregation groups. That was the deal. I just want a fair go and I want the deal implemented. Thanks, mate. So if we change it, I've got no problem with going up front. I've even got no problem with mandating up front and saying across all lenders for prime lending that the upfront is 1.2%, dead flat. Now, just like abolishing trail, that goes against just about every study there's been. But let's make it transparent. Let's make it a flat number in the interest of the consumer being satisfied. There's no sneaky deals going on. It's not a kickback. I detest that term. I think it's abhorrent. It's commission or income for work done. Let's be clear. And I work bloody hard, and most brokers would agree. Not that I work hard, but they work hard. Right, so we looked at this one before. So in the 90s, the margin on funds, we talked before, cash rate to delivery rate was 4%. Brokers drove competition, they drove the price down. It's now more like 2 to 2.5%. This one down here is interesting too. So when I started in 2002, this is a graph of discounts on professional packages since I started. In 2002, the major lenders had a 0.6% discount on professional packages. So that's a discount off the standard variable to what you could get as a professional. Now, over time, in that since then to 18, so 16 years, that discount has increased by 1.1%. So it was 0.6% in 2002. It's now about 1.7%. And the basic variable rates have pretty much mirrored that. So essentially, banks have offered bigger and bigger discounts to new customers. And have they told the old customers? I'd be curious, any of you that have been called by your bank to be offered a lower rate. I'd applaud that, I'd love that. I would see that as best practice for a broker who should be doing that, and many do. They want to reprice, they want the customer to stay happy, to either keep the trail or be serviced and supported such that they would go to that broker for their next deal. So wherever you had got your loan along this graph is going to be a function of what your rate is like. And if there were to be, and this is kind of phase 2 of the implementation of the commission, if there were to be a customer imposed fee, you'd be back to the noughties where there was break fees, there was loan stamp duty, and the government abolished that because they were anti-competitive. They didn't want to have a $3,000 to $5,000 fee in the way of a potential refinance for the customer to get a better outcome. So now it costs maybe $700 to $1,000 to refinance your loan. That means competition, that means risk reward. I want to get the client a benefit quickly. So their all up cost versus their all up benefit should be clear inside a year, and then they should be seeing the way ahead. So that's a little bit about the history of rates, better prices for new customers, leave the old customers alone, and the broker's able to interpret that. So that's about all we've got today. Thanks so much for your interest. Keep up the great work in spreading the truth, spreading facts. I'm a little sick of bank spin. I'm a little sick of being patted on the head and being told I'm very important and how I'm going to adapt. Well, how I'm going to adapt and change is I'm going to just change my cash flow to continue to receive the fair commission we've already agreed. I'll adapt to that, that's no problem. I'll adapt to providing opportunities for customers, for being competitive opportunities, for providing a channel for second tier and non-bank lenders. I'll adapt to try and be as good as I can every day, every week. But just all we're after is a fair go and the facts to prevail. I'm very confident the best interest of the consumer is going to work. We're just after a fair go. Thanks a lot. Have a great week.